I am an immigrant. I was born and raised in Panama, and ever since I was a little kid, I knew I wanted to eventually live abroad. It was just a matter of when and how. Fast forward 20 or so years, and I knew it was time. I wanted to move to the United States, like perhaps many of you, in search of a better future. And for me, that future meant pursuing business school and moving my family, both my husband and my back then 1-year-old daughter, to the US in search of better educational and professional opportunities. But pursuing business school with a family is very hard and very expensive. On top of the traditional tuition costs, I had higher costs of living in order to support a family of 3 for 2 years, and I had expenses that most students did not have, like childcare. My husband and I do not come from money, and we had very few savings at the time. So in order to pursue this dream, we knew that we had to start over. And starting over had a ticket price of $250,000. Both my husband and I had worked on well-known corporations back in our home countries, Panama and Guatemala. Yet when we came to the US and started talking to lenders and applying for loans, we got denied all the time. We felt that US lenders didn't care because we had no credit history. And it felt like everything we had accomplished so far was just deleted in an instant. It didn't matter anymore. It was very frustrating. And imagine this, on top of figuring out how do you move to another country, raise a child, figure out what you're going to do with your life, and on top of that, we needed to find the money. So after months of talking to lenders, printing out tons of documents, translating documents because they were all in Spanish, we finally found a way. We funded a $250,000 through a government loan back from my home country, a student loan from a US fintech startup that was just starting out and decided to bet on us, and money that I had to borrow from friends and family to pay for childcare, because as many of you may know, childcare is not considered an official expense for student loans. I know I'm not the only one that has faced this situation. And in my case, we were really looking for the money to invest in our future. But what about those that need money in order to overcome financial hardship? Those that need to buy a house to support their family, buy a car to get to work, or have financial emergencies or medical emergencies that they need to pay in order to survive. The system is not designed for people like us. But I am proud to work in a company that is working with lenders in order to fix this problem and give access to people like me to credit. And we are very excited to be here to show you how you can have a fast, simple, and flexible credit verification process with Plaid. My name is Valeria Angelcos, and I lead product marketing for our credit products.
And I am Rohan Sriram, product manager for Plaid Income. That was a really powerful story, Val. Helping such consumers. Go for it. Helping such consumers access credit is a big part of why I joined Plaid as well. So moving to today's agenda, Val and I are going to walk over some of the key challenges in today's lending experience and how Plaid can help by focusing specifically on 2 products we have designed keeping lenders in mind: Plaid Income and Assets.
Today's lending experience has many challenges, which we can categorize in 3 areas. First, building a complete financial picture of a borrower. Second, streamlining loan applications. And third, the other way around, improving borrower completion rates. And third, streamlining loan applications. Let's start with building a complete financial picture. As you all probably know, lenders want to be able to access different types of financial data from different sources to build a complete picture of a borrower in order to assess creditworthiness. However, just in like my personal experience, we know that traditional credit systems do not give equal access to everyone. A study by CFPB shows that 26 million adults are unable to borrow or use credit cards in order to pay for their expenses in the United States because they do not have a credit report. So just think about this number. 26 million people. That's essentially the size of Texas. So if you put all these people in one place, imagine what would happen if no one in Texas could borrow money or use a credit card. And what would that do to the economy and the lives of these people? And on top of this, about 9 million people are considered credit thin and are unscorable by traditional scoring techniques. Credit scores are designed to leverage the same type of data from borrowers that has been available for over 25 years. The issue is the inability to incorporate alternative lending information or just a vast amount of data that borrowers have today. For example, if someone pays their rent bills on time, they are demonstrating financial responsibility, right? But this is not considered in a traditional credit report. In addition, consumers are also diversifying their income more than ever. According to a study by Gallup, 1/3 of US workers, about 59 million people, participate in the gig economy through either primary or secondary jobs. And in addition, 29 of US workers consider their primary job an alternative work arrangement, which means that it's flexible and they decide when to work, how to work, and how often to work. And of these, 23% are full-time workers and 49% work just part-time. So I know I just threw a bunch of numbers at you, but what I really want to get to is that in today's world, many consumers do not have just one income, and they do not participate in the formal model that we're used to of one employee to one employer. So what does that mean for you? Lenders need to be able to adapt to these new realities and incorporate alternative income and transactions data into their credit decisioning model in order to serve this vast amount of consumers.
So now, let's move to improving borrower completion rates. Lenders care about providing a unique and personalized experience for their borrowers. The goal here is to improve conversion and reduce customer acquisition costs. Doing so requires, first, modernizing the application to make it seamless and easy for a borrower to complete. And second, adapting the application experience for a borrower's unique needs. What data do they want to share? How can they do so easily? How can the borrower be confident that they can actually complete the application experience without going through multiple iterations of the same process? Digital-first user journeys are critical for borrower success. By leveraging Plaid's expertise to convert users upfront, lenders can reduce their spend on high-cost tactics such as emailing or calling a borrower multiple times a day. Our solution, which allows the borrower to see exactly what data they're sharing, puts them in the driver's seat, enabling them to see the most competitive offer upfront and reducing need for them to shop around.
And finally, the last challenge is streamlining loan applications. Lenders wish to improve their underwriting process in two ways: through higher velocity and lower costs. Higher velocity means leveraging real-time, instant borrower data. Richer, more accurate data, straight from the borrower's source, provides higher validation and helps de-risk the loan process and reduce fraud. For example, we recently partnered with Mind, a property management company, to launch our income product. For Mind, automating their income verification through Plaid has doubled their income screening rate. This is a massive result. Second is lower costs, which essentially means shifting from manual to digital experiences. Many fintech companies and tech-forward lenders have invested in improving their digital presence by creating apps that are easy to use, while at the same time personalizing the borrower experience. However, this is not yet mainstream. Lender hears the word digitize all the time, but they don't know how to really balance this while at the same time optimizing for their business outcomes. So to recap, 3 big pinpoint areas. First, building a complete financial picture. Second, improving borrower completion rates. And third, streamlining loan applications. These are all very difficult to address. And Plaid has focused on these three key challenges to build solutions that support the end-to-end lender journey to help lenders drive higher loan numbers with more competitive terms through personalized understanding of the borrower.
So how can Plaid help? First, Plaid has deep expertise in conversion and very strong brand recognition with consumers. 1 in 3 US consumers with a bank account have already used Plaid to sign up for a fintech app. That's a huge number. When borrowers use Plaid, it is easier for them to connect to a financial institution, a payroll provider, or employer, and share data to complete a loan application. This brings me to my second point. Lenders can make more informed decisions and provide more competitive offers through a holistic review of a consumer's data that they receive through Plaid. Recently, we worked with Petal to integrate Plaid into their application experience. Using Plaid has made it simple for eligible applicants to securely share their bank data, making safe, affordable credit accessible even to those with little or no previous credit experience. And thanks to this partnership, hundreds of thousands of members are building towards a brighter financial future. Finally, we work with customers to adapt our products to their specific loan processes and decisioning needs. We recently worked with PadSplit, a rental verification platform, to build an income solution tailored to their users. The bottom line, users can choose the method that works best for them. PadSplit can verify more users instantly, moving people into homes faster. Using Plaid, the percentage of users instantly verified increased from 30% to 70%. That is more than a 100% increase. It's amazing.
Amazing number.
We also work with an ecosystem of partners in the credit space to incorporate our products into the systems and workflows you already use today. We work with TrueWork, who recently integrated with Plaid to incorporate our income solution into their income verification process. We also work with partners like Codad, who augment Plaid's credit products with additional data from accounting systems that help lenders effectively manage credit risk and loan application process.
And now that you know how Plaid can help you, we want to take a step deeper and introduce Plaid's lending solutions. Trusted by thousands of leading fintech apps and financial institutions, Plaid offers financial data solutions that help lenders make more informed loan decisions and give borrowers a more streamlined loan experience. End-to-end, from account sign-up to loan disbursement, we have a suite of products that help lenders' pain points across this journey. So we start with the account creation process. Remember that demo we showed you earlier of Lila getting a loan from Zippy? You saw how she created an account there. With Plaid IDVN Monitor, Plaid helps lenders verify the identity of borrowers, reducing risk right from the get-go. Next, during the underwriting process, lenders can use income and assets to understand a borrower's complete financial profile, enabling a more comprehensive and personalized underwriting process. And finally, lenders can leverage Plaid's assets data to verify a borrower's connected bank account ownership and auth to collect bank account information in order to disburse the loan. Let's now do a deep dive into our credit products for underwriting and decisioning income and assets.
We launched Plaid Income in April, and it's a game changer. Plaid Income helps lenders verify income and employment in seconds. Over the past year, we have worked with more than 40 partners to evolve our income solution to meet the diverse needs of both lenders and borrowers. With Plaid Income, a lender can verify a borrower's income through 3 different methods: payroll income, document income, and bank income. With income now generally available, we're excited to debut a suite of new features and investment areas. The first, we continue to invest in best-in-class consumer conversion. Plaid Income, just like our other products, leverages Plaid Link, our simple and seamless user experience that drives best-in-class user conversion. Plaid Income is also designed to leverage, where possible, a user's past connections to Plaid to provide an even more optimized experience, whether that's removing duplicative processes like skipping, searching for an employer we already know, or entering bank credentials. Second, we continue to improve our coverage. Today, we support income for different types of workers: full-time workers, part-time workers, gig economy workers, and more. With payroll income, we now have coverage for more than 80% of the US workforce. On the bank income side, we have connections with over 12,000 financial institutions. On document income, we have partnered with Oculus and have support for pay stubs and W-2s. Our solution is also fully configurable and flexible. We offer the ability to customize the solution using a combination of our different income methods, either in a cascade or at different points in the flow. The goal here is to ensure lenders get the right data at the right point in time. Finally, providing accurate income information was a lender concern we heard loud and clear. With Plaid Income, payroll and bank data is obtained directly from the source of truth, providing high accuracy and fidelity. And also, given Plaid's ability to get income information from multiple sources, we can, for example, match a document uploaded pay stub with entries in a bank statement to additionally verify accuracy. This is one of the many risk signals we're developing in the upcoming months to create a more robust risk signaling technology for lenders. And we're excited to say this is just the beginning. In the upcoming months, we're going to continue investing in improving the depth and breadth of our coverage and developing insights that can help lenders better understand their users.
Thanks, Rohan. We're now moving on to Plaid Assets. Assets allows lenders to make more informed and personalized underwriting decisions through a fast and up-to-date view of a borrower's bank account. With Assets, lenders can access a consolidated point-in-time snapshot of a borrower's finances, including historical, current, and available account balances, transactions, and account holder identity data. Additionally, lenders can benefit from categorized insights on top of these transactions to help factor into their underwriting decisions. So how can Assets help lenders? First, Assets help improve borrower conversion and transparency. Just like Rohan shared for income, Assets also benefits from Plaid's best-in-class conversion practices and lets consumers have the ability to review the data before they share it with a customer. So why does that matter? It puts the consumer in the driver's seat. Second, Assets allows you to offer more loans to more people at better rates, leveraging bank connections to build cash flow underwriting models that are specific to your customers. Assets also allows you to streamline loan applications, reducing the reliance on manual verification processes. And finally, Assets allows you to de-risk your loan portfolio, verifying assets and account ownership straight from the source and conducting ongoing monitoring of your users. Leveraging Assets at different stages of the journey, whether that's the pre-qualification stage, the underwriting stage, or the loan servicing stage, ultimately allows lenders to feel more confident about delivering the best possible experience for their borrowers. And we're excited to share a new feature of our Assets product, Relay Token, now in beta. We know that today, many lenders leverage lead generation platforms to source borrowers and service providers to assist with a variety of decisioning functions. With Relay Token, your lending partners can now receive a copy of the Assets report, and all players in the lending ecosystem can now directly access and leverage Plaid data to build better financial products without having to ask borrowers for this data yet one more time. And additionally, we're going to continue to invest in providing even faster ways to access Assets data and build credit categories to provide even more signals for lenders.
And don't take our word for it. Across our lending products, we have many companies that trust us to improve their end-to-end lending journey, including some of the ones that are here with us today. Most recently, we partnered with Purpose Financial to implement income and Assets. Purpose Financial is one of the largest providers of personalized financial services in the US. Since 1997, the company has issued more than 134 million loans. With thousands of new loan applications streaming in each month, Purpose Financial needed to make verifying income and assets fast and easy to avoid losing customers. With Plaid, Purpose was up and running with assets and bank income in just 33 days, right from the first stand-up meeting to going live. And after implementing, they've reported amazing results that you can see up here. Purpose Financial's Director of Technology and Innovation said, "The fast connection with Plaid keeps more borrowers in the application flow and allows some of them to receive funds within minutes of verifying their income. Our partnership has helped Purpose Financial innovate in their lending approach and put their borrowers first."
Plaid's vision in the lending space is to create a more inclusive, transparent, and flexible credit system in order to unlock financial freedom for everyone. We are focused on investing in solutions that power lenders to evolve the end-to-end loan process, to improve completion rates, and facilitate the credit decisioning process. And we are evolving our approach, originally focused on individual products, to build a frictionless end-to-end experience and build the future with credit-specific insights where we continue to leverage our machine learning models to build an even more complete picture of a user, moving from sharing permission data to sharing insights to full decisioning solutions. The current credit system has significant gaps for many, and Plaid wants to become your key partner in this journey to revolutionize the lending process. Thank you so much for attending our session. We are both really excited of where we are in our journey to power lenders and what's yet to come. And we'd love to hear from you. If you're interested in learning how Plaid can help lenders and any of our products, please feel free to reach out or scan the QR code behind us, and someone from our team will reach out back to you. And finally, if you're interested in learning how customers are using Plaid, we invite you to attend our Pat Split and Clover sessions coming up next. Thank you and have a great day.